Hi. In this video, I want to share a new position I've taken, specifically on Goldman Sachs. GS is the underlying, and the target price is 220. Of course, this target price is matched to an appropriate market level. 220 is right up here. Using Ninja Spread, I found a calendar spread that's sufficiently cheap and offers a good risk-reward ratio if the market reaches that point. The position has enough time, 18 days, which is just perfect. And it has backwardation. Obviously, this is always good. I'm shorting the higher volatility, which is at 40, and going long on the lower volatility, or IV, at 37. The only risk to keep in mind here is an earnings report on July 15th, which could swing the price in any direction. However, I've factored this into my calculations and decided that the trade is still worth it for me. In this example, I've entered the position with a 4x quantity at a debit of 0.56. Here's the fill. It happened today at 5 o'clock at a debit of 0.56. It's a classic setup with a 1-week difference between the two expirations, but it has 18 days in total. My cumulative delta is hovering around 10. Obviously, it's theta positive. So from here on, it's all about the good old waiting game and monitoring the position to see what unfolds. That's it for this position, and I'll continue from here. So, here we are again. I just made an adjustment to the Goldman Sachs position due to the crazy market fluctuations we're experiencing. If we look at the SPX, it took a nosedive yesterday and continued to drop quite a bit today, although it seems like it might bounce back in the short term, though who knows for sure. Given that Goldman Sachs has an earnings report coming out tomorrow, I closed out 1/4 of my position at 1.23. I'll show you the fill screenshot. It happened at 4:12, just 12 minutes ago, at 1.23. I've scaled out 1/4 of the position, so there's still some risk left, but not much. We're looking at 4x56 minus 1.23, so there's around $100 of risk still in play. I'm curious to see how the implied volatilities, IVs, will shift with the earnings report. Will the calendar spread widen significantly or not? We'll see what happens tomorrow. Interestingly, IV isn't really inflated considering the upcoming earnings report. The main point is, I wanted to reduce risk before the earnings, and the position has appreciated quite nicely, so I feel it was worth it. I'm also trying to close out another 1/4 of the position at a much higher price. If that gets filled today, the trade will become entirely risk-free. I'm looking to sell it at around 1.50. Let's see if that works out. This 1.23 wasn't bad either, so if I manage that, the position will definitely become risk-free. So that's what I'm thinking right now regarding the Goldman Sachs position. I've got my little magnet set up here. I'm actually expecting the market to land here by July 24th. This is my little voodoo. That's where I want the price to go. So that's it for now, and I'll continue from here. All right, back again. Today is July 16th, and I wanted to show you what happened with Goldman Sachs yesterday. The earnings report came out, and it opened very nicely around 225 and then got hammered back down to around 214. The stock price is hovering nicely in the middle. It didn't really collapse, just tightened a bit, making the triangle slightly narrower. But it looks pretty good so far, and it indicates that a scale out at 1.5 is currently possible. I have an order in at 2, which might be a bit ambitious, but I'm trying to get filled at 2. It's a GTC, good till cancelled, order. So, since the position is in a good spot, I'm not really messing with it at the moment. The stock is at 215 right now, and the aim, according to my voodoo triangle, is for it to reach up to 220. We've got 8 days left until July 24th, and it expires next Friday. For some reason, it automatically checks certain boxes when I switch views, which is a bit of a bug, but never mind that. Currently, I'm sitting at a $349 profit, so there isn't much to do right now. I just have to keep an eye on it to see if it gets hammered down below, say 210. Then it might be worth scaling out some more, given that time decay is in my favor, and the Vega is also positive. Overall, the position is in a great spot. I just wanted to show you that the earnings report basically hasn't changed much in terms of my situation. So, I'll continue from here. All right, back again. Today is July 20th, and last time I checked in, I had done a scale out, and I've just done another one. I'll show you the execution in a second. It was fairly recent. At 9 a.m., I exited a quarter of my position at 1.33, resulting in a curve like this. Basically, I can't lose on it anymore. I decided to scale out because I don't find this position too strong at the moment, although it could go through the weekend. Friday is the expiration date, and the peak value for this calendar spread would be at 220. But I liked that I could exit a bit higher, so essentially half of the position has been closed out, and it's no longer at a loss. Of course, there's risk involved, as there's currently a $300 floating profit on it. Its delta is positive, its theta is also positive, but theta will turn negative in a few days. So it would be good if this could move a little toward 220. Looking at its curve, there's roughly a $400 profit potential in it. Currently at 300. The risk-reward ratio isn't that great in the sense that I'm essentially risking $300 to gain an additional $100. So I don't plan to hold it for much longer, which is why I scaled out gradually. I'm hoping I can scale out at an even higher price in the next few days. So that's where the position stands for now. Half of it has been closed, and I'll continue from here. Alright, back again. Today's July 21st, and the price is nicely approaching the voodoo triangle. To reduce more risk, I closed out another quarter, leaving just 1/4 of the position still open. I managed to exit at 1.40 at 8:40 a.m., just 6 minutes ago. So I've essentially moved it over here. There was a 1.23 scale out, a 1.331, and now a 1.401. So far we haven't seen huge differences in the prices, but I've left the last quarter in as a lottery ticket, considering today is Tuesday, and we might get to 220 by Friday. So essentially, I can't lose on this anymore. At worst, there's a $170 profit on it. From here, I'm genuinely curious to see if we can get all the way up to 220. I've left the last quarter in as a lottery ticket, and I'll probably close it out on Thursday, or might even let it run until Friday, depending on where I see the price. So, that's all I wanted to check in with for now, and I'll continue from here. Alright, back again. It's July 22nd, 4:15 p.m. Only 2 days left until expiration, and things have taken a turn for the worse with Goldman Sachs. Sure, it could correct itself within the next 2 days, but I'm not going to wait for that. I've just decided to close out the last quarter of the position at 0.95. Obviously, it would have been much better at a higher price. The scale out went pretty well initially with 1.23, 1.33, and then 1.40. Now it's at 0.95, and it could lose value pretty quickly if it goes against me. So who knows what will happen next? But I didn't want to risk these last 2 days, so I closed out the last quarter. The total profit for the position stands at $267, which is a little over 100%, given that the capital risked was 4x56, the premium I put on this trade for this example. So it's a story that brought in more than a 100% profit. I had higher expectations at the start because I managed to buy it at a good price. The scale-outs helped in this case. Otherwise, the profit would be only $160 if I hadn't closed any. I thought we'd get up there, and this could have a $500, $600 profit potential, a 3x winner. But the market had other ideas. So I managed the risk accordingly, and it's closed out with a $267 profit. Hope there were some useful thoughts in there. Feel free to reach out if you have any questions. Thanks for watching. Bye.